Good morning, everyone. All right, well, we are finally doing a trade review again because the last few mornings have been so short that it's not worth doing a trade review. Lately, every morning's been green. Yesterday, I took one small 20% put trade. Yesterday was the most volatile day uh, since 2020 or 2008. And the days before, just one trade, maybe two, super basic, super quick, nothing worth reviewing. Well, today I finally have something worth reviewing. We did have a lot of action happen today. Uh, However, today was a terrible morning to trade options, unfortunately. It was a terrible morning. Now, I ended up the day slightly red, like $100 and some change under break even personally. So very, very slightly red. But it really shouldn't be that way. This morning should be a pretty bright green morning, and I am going to review that. And it starts with my pre-market analysis. Uh, if this is gonna work, hang on. Why is this not? Oh, select bar. There we go. So here was the pre-market analysis. Here's what it looked like right before market open. Pretty easy to see that I am bullish for yesterday's high. That is the big PT. Now, keep in mind that price target is over 200 points away on NQ. While it is closer on ES, it is still very far away on NQ. But that's my bias. Just simple liquidity analysis. When a majority of a move is invalidated, typically price action will try to chase the nearest major point of liquidity, and that is yesterday's high of day, which happens to reside in supply on ES. So immediately that's what I'm looking for, and I don't have much room, right? I'm really looking for ES yesterday's high. Yes, NQ high would be nice as well. This pivot would be nice, but it's really far away. So with ES being so close to the pivot, really if the first candle opens green, I'm going to have to be in. I usually don't like entering on the market open candle. But unless it is a very nice PT that I can't afford to miss that's worth going half size on, if I have to get in, I will go half size. And that's what happened this morning. So we did get a decent candle open. And right away, it's clear that NQ is stronger than ES. So I entered half size here. I'm going to have to pull up the contracts. Give me 1 second to look in my Thinkorswim. I believe it was, yes, it was the 452 calls, 0 days at 68 cents, but I filled at 70. So I tried getting 68, it didn't work. Then I market filled at 70. Shot up to 77 here, but then came back down to red. Anyways, I was planning on adding my second half, averaging down on my second half, roughly at this level here. And I currently didn't really have a plan to average up. But we dropped, and I'm like, okay, if this drop invalidates, I will average up. Otherwise, I plan on adding where I just drew my white line. NQ still stronger than ES, looks pretty good, and I ended up adding my second half here. This was the first major red flag of today. These calls didn't get back to green. I added my second half here, but I filled it at 62 cents. At the same place that I initially entered, which, I mean, is kind of expected. That's why I'm so big. Unless the market opens super volatile and it's barreling towards a flawlessly perfect triple bottom or triple top, and I need to be in right now. That's one of the biggest reasons why I'm always half size at market open if I have to enter pretty much right at market open, because you have that initial IV surge at market open and then the contracts chop after that. So I filled my second half at 62 cents. And stop loss was roughly here. And really, I'm just looking for ES to get to the pivot. NQ's pivot's way too far. Well, it started moving the right direction. It did start out as green. However, then it didn't. And now we have an issue because NQ is so much stronger than ES, but ES is dropping. And these trades are very, very hard to stop out of because you're so right as far as the strength analysis. And you know that if ES just bounces, NQ is going to take out new high of day again. A very hard trade to stop out of, but today I was very quick with my stop losses because just this candle right here, I'll actually pull up the options chart. Give me one moment. Is the 52 calls. 1 second. At 6:35, those calls already dropped to 48 cents. So that was a big drop. And another problem was my average was 65? 65 cents? No, I filled at 70. It was 66. Um, my average was 65 cents, but remember, I initially entered at 70 cents. The highest these contracts got to here was 71 cents. So even though, it may look like a little, even though we were up almost 40 points on NQ, 158 ticks, which is above average, pretty much an average win. My average 20 to 30% win right there on normal mornings. The contracts barely hit my entry price. And on this close of this red candle, all of a sudden the puts are now at 48 cents for a sizable loss. So during this next candle, I ended up stopping out quickly. My stop loss was initially all the way down here, and that's still a 1.8 risk to award. But I ended up stopping out on this candle at just a few minutes after opening. Very early stop loss at 45 cents. So that was a decently sized stop loss there. So that was a minus 31% loss, full size right out of the gate. Not a good way to start. I actually got a pretty good fill on that because it was bouncing around, but even though it closed with this buying wick, the option contracts on the chart did not get a buying wick. It closed at a low of 43 cents. So I stopped out here. I can't afford to hold more because the contracts are dropping too much. I don't hold through 50% losses, and it's looking like one more red candle is 50% loss, so I have to pull the plug. Also, it's a little easier for me to pull the plug, even though, NQ is super strong, and I was correct in that regard, because ES has now invalidated a majority of this entire run. So now my sentiment is starting to change, and now I'm starting to flip bearish for this pivot down here, as I always do. You guys know momentum and liquidity analysis is my primary form of trading. Well, this was nice because ES is a lot weaker than NQ. And NQ is chopping up and making higher highs with selling wicks putting in an ascending broadening wedge, and it's now breaking to the downside. That's bearish. And with ES's weakness in invalidating most of this move, it's looking pretty good. Now, I initially said I want to get in below 52.30, but the way these contracts are moving, I didn't really want to wait that long. So what I did was I pulled up the SPX contracts. It got to demand. It was really tempting to enter here, but I decided to wait because it closed with a buying wick. And then this bounce happened. I said if this bounce invalidates, I'm in. But it was during this candle that I ruled out SPX puts. They're untradeable. Because the market is so volatile and IV is making these contracts so expensive, you have to go really far out strike price wise. And for the SPX puts, it was too far out. I was watching the puts during this drop. They were not moving at all. For reference, I think I have the same puts here. They were the 49.20 puts. At 6:34, which was the last little green candle we had right here. At 6:34, these puts were at 2.7. And then during these two red candles, they shot up. It was looking really good. They shot up all the way to 3.5. However, during this red candle, they didn't go up more. And in fact, they stayed at 3.5. And the same thing for the next candle. And then this green candle, they dropped all the way down to 3.1. Whereas the QQQ puts, let me pull them back up. It was the 420 puts. The QQQ puts weren't doing nearly as terrible. Like they weren't doing as bad. For whatever reason. I don't really know why it was so terrible. Sorry, 637. 637 on QQQ puts actually went up. This last red candle, they actually went up from um, 80 cents to 90 cents. Seems about right. So and as this bounce was happening, I was watching the way the candles were moving on the SPX puts, and it was clear that there was a high spread and very low liquidity. They were not moving well, so I'm like, well, shit, ES is weaker, but I'm gonna have to get into QQQ puts. The close of this candle made me determine that, wow, NQ is weaker. This is kind of like a stars are aligning moment. I filled QQQ puts here. Really, what I'm looking for is I'm looking for that ES pivot, but honestly, I'm trimming heavy if ES even makes a lower low. Stop loss right here. The pivot PT will be somewhere around demand, I think. And I filled the 420 puts at 70 cents. And early on in the next candle was looking pretty good. Even though it only went up a tiny bit, those puts were up over 10%, which is way different than how those calls treated me in my previous trade. So the puts were already up 10% during this buying wick. And at the close of this candle, they were at 74 cents. So I was literally green even though this candle went the wrong direction. It was looking really good, but the problem was now NQ got a green candle, ES got a red candle, and Q flipped stronger again, or so it appears. And then we get this candle. And unfortunately, I got to pull the trigger because what is my primary bias for today? Yesterday's highs, right? The pivots above. 52.8650 on ES and 183.62-ish on NQ. And now we have successfully invalidated a majority of this drop. I said even before this candle happens, if I stop out of this trade, I'm getting right back into calls and I'm getting into them heavy because that is my main bias. I took a stab at this bias. I was formally triggered into this, I was triggered into this trade. It was a fine trade. But price action doesn't seem to want to do that. But I was really thinking we're going to drop more because of how choppy the calls were. The call premiums were the opposite of bullish when I traded them. So I ended up stopping out early, pretty much at the end of this candle, for only minus 17% at 58 cents. It was pretty good. And you could have, on the next candle, you could have got that as well. You could have stopped out a little higher, maybe at 60 cents, but a small loss there. So right now I'm 0-2, and I'm down roughly 49%. So 150% green trade would cut it for me, right? But now I'm back into calls. I have to get into calls. So pretty much immediately, I fill, let me see. Yeah, pretty much immediately I fill SPX calls. The SPX calls, unlike the puts, were looking pretty decent. The SPX calls from 638, not the bottom candles, from 638 to 743, they went from 2.3 all the way up to 3.25 in just 2 minutes right here. And then at 743, they were back down to 2.7. So they were going up, right? Wasn't as bad as the puts. So anyways, I filled QQQ calls as well here. And the PT's all the way up here, but anyways, I filled QQQ calls at 63 cents, and I filled SPX calls at 2.85. Now keep in mind, this ESPT might not seem very far, but it's 127 ticks away. On ES, that's a lot. Like a lot. And NQ, 200 points away. 870 ticks away from my entry. So that's really far. But I was triggered in full size, and, I'm just looking for a move to happen. Starts off red, gets this candle, I trim here. I cannot not trim, because 2 trades in a row now, they started off green and went red. This one's a lot more green this time. I trimmed both. I trimmed those spot SPX calls at 3.1 for 10%, and I trimmed a lighter trim on QQQ because I believed it was stronger. Trimmed QQQ for 25%, but it was very clear that the QQQ calls were moving way better. Well, we end up skyrocketing up, almost stopped out during that pullback. We skyrocket up, we get to the ESPT, and as I go to sell my SPX calls, they didn't move. They were still at 2.8. They were actually less than what I bought them from, or bought them at. And it's not like this sat sideways and chopped for an extended period of time Within 15 minutes, ES ran over 30 points from my entry, and my calls were still break even. This is the biggest scam that I've ever had options trading, at least in the last year and a half. In my recent memory, this is the biggest scam. I've never had ES me get an SPX calls, not buy during an IV surge, because keep in mind, when I bought these calls, I bought them at 2.85. Those calls hit 3.2 here, 3 candles before. So I thought I was dip buying the calls because the ES was already back to where it was, and the calls were down 40 cents from this high. So I thought I dip bought the calls. I thought I did fine. But yeah, the SPX calls did not budge, even though ES moved 30 points. So I did get a very small trim at 10%, but I dumped the rest at break even here. Super, super unfortunate. And, you know, it is really unfortunate because I was really expecting today to at least be like a medium green day. But it wasn't looking like it anymore because I'm not full size in both trades. I said I needed 50%. I need pretty much 50% of a full size trade to be break even. I was heavy though, so I believe I was roughly 1.5x leverage. So I was 75% of a full size position in each. Well, I averaged 1 or 2% on SPX after selling at break even because, you know, I only trimmed a little bit at 10%, like a very small amount, like 2 contracts, literally 1 or 2 contracts. No, it was 2. And only a little bit of KQQ, but I did trim KQQ as well. Well, NQ got up and the contract stopped moving. I trimmed most between 90 cents and 100, not 100, $1. And they got to a high of 101. But I ended up selling the last bit right after it missed. It got here, was looking really good. I only had a small runner left, and I sold the last bit right after it missed here. No, one more red candle. One more red candle. Nope. This. Sold the very, very last bit here. So, you know, it is whatever. I left a tiny runner in. They got to 60% gains, but my average gain on this trade was about like 47-ish. My first trim was very, very light. I didn't trim as much in QQQ because, you know, it was stronger. And it got to 60% gains, but I only had a runner. I pretty much averaged like 45-ish% on this trade, and it was less than a full-size trade. You add that to this tiny win that I got on SPX calls from trimming, I ended the day slightly red, like red by a fraction of a green trade, like just a few percent, whatever it was. So, yeah, very unfortunate. But the PTs were good. NQ did end up barely missing my PT, and it is barreling downwards, which is pretty neat. It makes me feel good because I didn't hold to the PT I sold early. I will say, though, for the afternoon future strategy, it is looking like a phenomenal trade if a majority of this drop invalidates and using this as a PT. This barely missed, so everyone put this on your chart. Next time that price action comes up here-ish, it is a phenomenal trade to hear. Like a phenomenal trade. So make sure you have this line on your chart. If you're in here, make sure you have this freaking blue line on your chart. It's the best PT we have at the moment. But that is the entire run invalidated. Wow, what happened? Keep in mind, I'm not bullish on the market. You know, the market exploded off the fake tariff news, and I get it. You know, Trump, you know, countries are coming to the table. Here's the thing that gets me, though. Everyone expected countries to come to the table and negotiate tariffs, right? The same thing happened in 2018, as we talked about with Liam on Saturday, guys. Trump 2018 announced tariffs. It was just on China. The market cratered and then shot up right after a trade deal was made between U.S. and China, and then it went back to all-time highs. But this time's different though because, you know, obviously it's not just China; it's every single country. But it's easy to expect that, yes, the EU and, you know, pretty much everyone in the world is somewhat largely dependent on U.S. trade. And countries coming to the table to negotiate a deal is not surprising, for me at least. Like, it's expected. You know, what are they gonna do? Declare war? Like, what are they gonna do? Declare war, go broke, or whatever? It's not gonna happen. Everyone knows Trump's a businessman and he's coming. He's just making a deal, right? Um, so the confusing thing for me is it's so expected, yet we had so much sell off, and not just so much panic sell off, but like Buffett sitting on $400 billion in cash. Now, keep in mind some of that's for tax reasons, right? The taxes are much lower now. Um, but you see a lot of hedge funds liquidating and de-risking, and even after yesterday's kind of pump, you still see large funds de-risking. Why would they be de-risking if the market's just going to shoot back up when the trade deals are negotiated? So, you know, I think we are in for at least a couple more weeks of downside. I mean, the 2018 thing lasted a couple of months. I wouldn't be surprised if this downside lasts a couple of months as well. It would be absolutely insane if we just shot all the way back up within a couple of weeks. It's technically possible, but I feel like it's not as black and white, you know. So in conclusion, I'm bearish for the next few weeks. Um, you know, I'm dip buying a little bit long term stuff, but not a ton, not an absolute massive amount. But this drop is interesting here because I don't think it comes from any news. Um, I mean, Trump did say 805. Uster Green says Trump has been clear, no exemptions to tariffs, which was said yesterday. So, I mean, it's just interesting to me. You know, we run from these lows, we run all the way up 3% on ES, almost 3%. And then in just an hour, we crater, remove 2%. We invalidate a majority of this run on no news. But we didn't really go up on news either. Just kind of a knee jerk reaction to demand and all the things we dipped into. So no, this is very interesting. I don't know what's happening, but it's TA is great. You know, it's great to trade. It's not great to trade options, as you guys saw, but if you're trading futures and whatnot, TA is playing out. I mean, this is the kind of volatility you want to see. Now, obviously, the first 15 minutes of market open was not because we were chopping, but the candles were massive. So if we're very volatile, but we're not sweeping pivots, I will be red every time. But this price action is really good trading price action. So if you're trading general liquidity analysis, supply and demand, as you can see here, I mean, this morning, beautiful supply rejection. You're watching it right now. Gorgeous demand bounce out of a triple demand zone. By the way, I do not expect this demand to hold, though. I'd be surprised if it does. That is a big bounce. But the volume spike on that last candle kind of indicates that it's going to come back down. But regardless, this is good trading price action. So make sure if you're trading futures, most of you guys are, size down so much. I would go 1/3 your average size. An average size as in not yesterday's size, but your size a week and a half ago. 1/3 that size. Because your trades are going to be massive. And just trade it. Trade the pivots, trade supply and demand, trade your patterns, because it has been playing out very nicely. I think today we are. Today's a very nice day. I'm looking forward to my afternoon strategy. Granted, I am due for a red day. Those of you that have been trading the new future strategy that I released, it has been printing for the last week straight. Even yesterday, with all the crazy things. You got an 800 tick win, 870 tick win on NQ. It has been printing lately, so it is due for a red day, but the types of analysis we teach here are working at the moment. And now I'm thinking news is going to calm down a little bit. The news is out there. I don't think China is going to rush to the table right now. The EU has, and this is part of the reason we bounced. The EU, I watched it. It was either last night or sometime over the last day. They said they're coming to the table to negotiate with Trump. That's what the market wants. I think China's going to be a bit slower, so I don't think we're going to see much news today and tomorrow. And I I think that's going to allow some nice price action to play out, some nice liquidity to play out, and your trades not be ruined by fundamentals. Knock on wood. But with that being said, does anyone have any questions regarding anything I've talked about, as far as this morning's trades and whatnot? What are the exact specifics of the strategy? Viral thinks I did post it in the premium announcement channel. You guys have all the back testing, and today I'm going to be sending the finalized March back testing. And I already did a lesson for you guys, but again, it's not recorded unless you've been a premium member for at least a year because it's far too valuable. But you guys have months. I think you guys have 5 months of data, and you're about to have 6 months when I post the March back testing. So you guys have everything you need to use the strategy. You don't need your handheld. All of it's posted in the premium announcements channel. And like I said, I am going to post the March data in trades as well. Chipkin says we have FOMC tomorrow. Yeah, we do have FOMC tomorrow. That is true, which means I'm not allowed to trade my strategy. So took a trade on that drop. Nice job, Bima. Did I not wait before I go? Did I not just call out 3 minutes ago? Because of the volume on this candle, I expect this to be a dead cat bounce immediately after it goes right back down. It's almost like we know how to read a chart. That's beautiful. And that's obvious too. I mean, look at the freaking volume spike we had. Look at that. It's not what you want to see. That's what the average smooth brain retail trader wants to see. They love volume spikes on pattern breakouts, and they love volume spikes after bounces. And they wonder why they're always red. But gosh, that's freaking beautiful. I think ES is going to try to find its way to demand. But all right, I will let you guys go. And 2 hours and let me see, what time is our back test? Let me see real quick. Our live back testing is not going to be live back testing. I'll be showing off results. It is at 12:30. So in an hour. Ooh, I only have an hour. Okay, I might not finish the back testing yet. I'm gonna have to rush to do that right now. In an hour, I'll be back in voice. Unless I might delay it. I might need to delay it. But in an hour, I'll be back in voice and premium voice and review the March data with you guys. But all right, I will see you guys later. I'll let you guys know when this recording is posted to YouTube. And good luck if you continue to trade. Reach out if you guys need anything. And I'll see you guys soon for the March future strategy data.